All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. My apologies here for a little change in video times over the last several days. Things have been a little bit hectic in terms of what's been going on in the world. I know most everyone's dealing with some of the different things, but we've made a few changes and gotten it so that I don't really need to leave the house, to broadcast. We've always had backup there, but it's now where we have our main equipment. So it has been a little dodgy here, but once we start getting back into the swing of signals and trades, the video times will be the same. But with the market kind of doing different things without a lot of signals, I figure I'll jump on when I'm ready, and then they're posted. You can access the videos as you want in your own time there. But this morning I want to go out and take a look at a couple things here, and let's start off with the crossovers and the metrics, and then we're going to go just play a little game, what's it worth, and kind of speak to that. So let's start with the 3-7 crossovers that are going on out there in the market here today. On the bearish side, nothing, which has been normal. We didn't see anything on the bearish side yesterday. But on the bullish side, we have now 5 stocks: American Airlines, Procter & Gamble, UPS, Walgreens, and Walmart. It is the first time in a while. It has been a while since we've had upside 3-7 crossovers. Now, when we look at them, most of them are not signals here yet. We could see some here this afternoon. What's really interesting is there's a component, as you know, with the challenge where if it moves 2 average true ranges to set the signal, then it's not a signal. But take a look at something like Procter & Gamble, the average true range. It's gone from 1.5 to 6.5. These are monster average true ranges, so we can get some signals on some bigger moves because the average true ranges have risen so much. But this is a stock that was at 101 yesterday morning, is at 119 now. There's zero price stability there, and so chances of setting a signal are very slim. But what we need to start to see in order to get signals are for stocks like Procter & Gamble to give some sort of upside, crossover, pull on back, set a little higher low. We had, stocks like Procter & Gamble give that crossover early in March, but as they pulled on back, they set new lows. So we still need to see that process of 3-7 crossover, pull on back, higher low, fresh 3-7 crossover for the most part. Now, it's not an absolute requirement, but for the most part, that's what we will need to see there. But if we take a look at the others that have the crossovers, they're very similar. American Airlines, this is the first upside crossover that it has had, since the route that, the stock has gone through. And you can see how volatile it is. You can see how much movement there is. I mean, this is a stock where, the average true range is just absolutely soared. And what's interesting is the stock is half the price that it was in February, yet the ATR is more than doubled. So the percentage movement is, pretty much off the charts there. But American Airlines, UPS, this is one that I've been watching. It hit my radar last week because this is one that has been gapping down, but seeing some decent buy pressure throughout the day, or gapping down and not seeing incredible sell pressure even on the worst down days. Most of the moves have been the gaps. And then the upside moves have happened during the market hours. So been interesting. 3-7 crossover on it, but it's in that Procter & Gamble situation. Needs a higher low to come in, here for it, most likely. Walgreens, WBA, here with an upside crossover. This is one that had an upside crossover back here in March, but hit a new low. So isn't going to be a trigger there today. And then there's Walmart, which where I stand on Walmart. This is one of the to me, this is one of the stories out there where we look at what's going on in the world. The situation for Walmart's improving. It's one where are they going to be rewarded by investors is the question. We'll talk about Walmart a little bit more going forward. But this is one that could potentially signal it is coming off of a lower low. But you'll notice the Stoke 39.1 is moving above 50, which we don't see very often or in many stocks that are out there. It's had a monster move to create this upside crossover, so it might be more than two average true ranges here on it. And it's one where if we look, what would the price target be based off the average true ranges? It would be about 120, or excuse me, about 126 here for the stock. So a pretty interesting action. We'll see if it signals. But not only do we have to get a signal, but we need to get some decent option pricing in order for a signal to be confirmed. And when you look at something like a Walmart, its implied volatility is 68 right here. That's a massive number for Walmart. And just take a look at the spreads. The spreads just simply aren't tradable. So if it is a signal, it's just something I can't get into for the challenge with the spread, with the implied volatility where it's at. And we almost never say that about Walmart. Walmart, almost never do we look and say, oh, these options are terrible. Well, they are. And for good reason. It's not like we can look and say, well, it has no reason to have this bad. No, it does have reason. If you're an option seller, are you gonna take less than this? No, you're gonna want a bigger premium to be on the seller side there. But a little bit of life in terms of some upside crossover action here today. A little bit of life in the overall market. We saw at the open this morning some of that margin call element come into play and create that heavy selling. But since we've seen a nice little bounce, there's some hope for some government action later on this week with several bills going through Congress right now. And all eyes continue to be on the coronavirus situation, how it's expanding, and that whole story continues to play out as things shut down, as the economic dip is evaluated. Goldman Sachs coming out basically saying it's going to cause a 5% drop in GDP, which would be one of the biggest drops that we've seen, but it's also very different from other economic drops. There's a very specific catalyst affecting the global economy that is one where, if in 2 weeks it's had its course, even if in 2 months it runs its course and the world gets back to normal, stocks are incredibly undervalued. If it lasts for 2 years, stocks are incredibly overvalued, which is one of the reasons why the market is struggling with any sort of real price stability here. Now, what about the market metrics? What are we seeing? Are we seeing anything, that suggests that maybe we're seeing a bullish turnaround here? Not so far. Still a lot more new lows than new highs in the market today, which is what we're going to expect. Typically, these types of pullbacks will end when we start to see a few new highs come in. But, we're not seeing that yet. It suggests that we're still in more of a bounce position as far as the advancers versus decliners. One of the nice things about the move today is it's not as many advancers as what we saw on the other two big rallies in the market. So there's a little more differentiation going on. And you say, well, wouldn't it be better to have more stocks going up? Well, not necessarily. When you start to go from a bearish style market to a bullish style market, you see more differentiation. It's not just all in and all out. There's more differentiation. So the advanced decliners, it tends to be a little bit lower on the up days than what we saw on some of the monster up days, you know, last week. So, so far decent, decent, but not a big change. If we look at some of the real short-term metrics, like the number of stocks above a 7-day moving average, here, it's improving. It's up to 92, but it's not improving in a material way. In a way that suggests bulls are taking over here just yet. We need to move up over 200 for that. And then, the 20-day moving average, which tends to be a little more lagging, it's still only 20 stocks in the entire S&P are above their 20-day moving average. That's a phenomenal number, just absolutely phenomenal number. And you'll see most of them are consumer staple stocks here. One, two, three, four, five, 6, 7, 8, 9. So 45% of them are consumer. 10. So 50% of them are consumer staples if we include Walmart there. So not a huge change, metric wise when we look at the volume flows. The volume flows are still pretty strongly bearish here, and just not seeing a big mass move in the metrics on this relief rally here today. So, that could change by the close, but, you just take a look. Is this the type of day that inspires mass investor confidence, where the market opens up at 2440, drops to 2360? I mean, almost a 100-point drop there. Then we get almost a 200-point rally, and now we're in the midst of a 50-point drop. There's just no price stability within percentages still, and so that's not the type of environment that inspires investor confidence overall. But what are investors faced with right now? Well, they're faced with this question: what is it worth? I mean, what is it worth? Here's Lennar. Lennar is a home builder. Here's the stock. What's it worth? You think about what's going on out there. We can go look at Lennar's numbers all we want. But with the coronavirus, they're a home builder. How many people are home shopping right now? How many home sales are going on right now? How much more building are they going to do? What's happening to their business? There's an absolute disruption here that the market doesn't quite know how to interpret, to digest. Here's Royal Caribbean. They basically ceased operations. They're no longer in business. How do you value that? How do you say, well, this stock's worth $30? No, this stock's worth $50. No, this stock's worth $10. You can go look at all the metrics all you want. You can look at the price to sales and the revenues and but you essentially have a business that shut its doors. Yesterday here in Salt Lake County, where I live in Salt Lake, Utah, the order came down that all restaurants, dine-in restaurants, were to close for 30 days. How do you value a Chipotle in that environment? It's one thing to think about all the workers laid off or no longer, employed, and are they going to get employment benefits, and is the government going to step up and pay those? Yeah, they probably will. But for investors, what's that mean for the stock price? What's it worth? You got a company that's basically not operating. Okay, if they don't operate, their next quarter's sales are going to be awful. Yeah, it's going to be a one-off, but how do we evaluate it going forward? Not only that, how do we value a company that's not in business? How do we then value the worth or the value of the company if they go back into business? If all of a sudden, 3 weeks from now, Chipotle is able to open their doors, business as usual, what's the stock worth? So do you really want to sell it? Investors have some really hard decisions and decisions they've never had to deal with. And I think that is the big key out there. These are not things that investors have dealt with before where, you know what, there's some foodborne illness going on, Chipotle has to do this, that, and the other, or, the sales trends are falling because of the marketing campaigns. No. This is a shock that has hit them that is not their fault, that has nothing to do with what they've done, and is something that's never happened before. So investors are going from a period of pretty good known. For a long time. Yeah, there was the U.S.-China trade war and other things, but when you looked at company metrics, you could have some confidence in what they were and in what they were going to be. But right now, investors don't have that. They have no confidence in what the numbers are going to be going forward. They don't know. How do you value it? They can't. Can't just pull up a chart, a fundamental chart on Boeing and say, well, because of this, that, and the other, Boeing's really undervalued right here. I mean, I pulled up Exxon the other day, and, we saw with Exxon, if we take a look at the dividend yield, and we just go max history, Exxon's never had a 10% dividend yield. It was 10% yesterday. It's 9.5% today. But it's never had that. What about a price to book value? Has it ever had a book value below 1, a price to book below 1? No, never. Investors don't know how to value things. And so what is it worth is a big question mark. How do you deal with it? How do you handle it? How do you kind of come to grips with it? Well, the one thing to understand is that it's not something where the bottom happens when the panic is the worst or the fear is the worst. What tends to happen in markets is when things are becoming more unknown, the path of least resistance is down. When you start to get news, even though it's bad, and in this case, we will see a lot of bad news in the headlines going forward when it comes to earnings and revenues for these companies. But keep an eye, because what's going to happen is you're going to see bad news. You're going to see Chipotle come out with some very bad news, and you're going to see the stock gap on down, and then just not see any more sellers. They're going to vacate. They're going to be gone. Bye-bye. They're going to just, there's not going to be anyone left to sell, and the buyers will start stepping back in. Why? Because even with the bad news, if the bad news is such that it is showing a one-off and things are going to get back to normal, the bad news is actually good news in terms of now we know what we're dealing with. And so right now, for so many companies, it's what is it worth? Are there companies right now that, you go, what is it worth? But when you really look at them, you say to yourself, hey, their business isn't getting worse with all this. You could argue their business is getting better with all this. Yeah. Netflix. Amazon is that for me. Right? For me, Bank of America, lower 20s to me is an absolute long-term steal. It doesn't mean that I'm not going to have to, survive some big chop and some big drop. But what is it worth? Nobody knows. Nobody knows. And that is the big reason for volatility. But if you're looking for that, oh, man, I want that magic signal that things are going to be good, things are going to be golden going forward. We may still be months away. We may be hours away. We don't quite know. But if we go back in time to one of the only times in history that this market compares to, and that is back to 2008 and 2009, we could take a lesson from it. And let me show you. Let's go back 2008, 01, 01 to 2009. Let's just go 12/31. So we'll take a look at 2 years here of data. And I'll just come into the SPY here. And let's get rid of our indicators. Okay. We had the big kind of shock phase. We had the Lehman go under, and then the market just rally big afterwards. And then, just as we saw the global contagion of the debt crisis and some of the forced selling that it caused, we had some of these big drops come in, with some very big pops, absolute monster pops. But then we got into this stage in 2009, and this is often referred to as the despair stage for bear markets, where you just get this bleed, bleed, bleed. Nobody wants anything. It's bad news all around. Nobody's buying. And then we see the bottom here in March. And a lot of people think, oh, well, we started to have good news, so things went up. No, this was very interesting back here because it happened on some bad news. And one of the stocks that was most remarkable was Arconic. And it was Alcoa back then. We'll see. Can I plot it? No, I can't. Because they've split Alcoa and Arconic, so we're not actually seeing the company here. But they were known to be the first earnings. They kicked off earnings season, and they came out with their earnings, and they were ugly. But one of the things that it did is it put a known element into it all. It took and said, okay, what was very uncertain is now becoming a little more known. And they had these really bad earnings, and investors started to step in and buy. We saw that out of Apple as well. We started to see these earnings come in and these numbers come in, and in some cases, just not earnings reports or anything like that, but the company coming out and saying, hey, this is the effect that it has on us. And even though it was pretty negative, we started to see these companies get bought up. And I can't help but wonder if we don't see that happen in a similar fashion with the coronavirus, where as we start to see companies coming out sharing the impact and the depth of magnitude of the impact, that if we start to see that bad news get bought up, to say the bottom is in for some of these stocks that have been absolutely railroaded. There's no other way around it. When you're talking about a Boeing dropping, to the degree that it has, or an American Airlines or a Lennar, some of these stocks where they just don't know how to value them, with the businesses essentially shutting down. Do we see that bad news bottom ultimately come in? And that, I think, is if you're wanting to be patient but not wanting to miss major upside, that's what you're looking for. Because you can't value what it's worth. You can guess. You can say, well, I know Exxon is this, that, and the other, but you can't really put a value on it, because if Lennar is out of bit, if Lennar ultimately nobody buys houses for the next 2 years because we lose 5% of the population, Lennar goes bankrupt ultimately. And so, is that a high probability? No. Are there people saying that's going to happen? Yeah. Could it? Sure. But there's a million different things that could happen. But investors need to see the unknown start to turn into known. And it doesn't matter if it's really good news or bad news. And in fact, the better bottoms tend to happen on more bad news. All right. So anyway, that's what we're seeing out there right now. We are seeing some crossover action. We're seeing some metric shift, but not to a great degree here. And we continue to see investors wrestling with this question of what is it worth in an environment of absolute, price instability. There just simply is no price stability out there, and that doesn't look to be changing, at least not yet. Thanks for hopping on. Have yourself a fantastic day, and we will talk to you later. Take care.